Hi, good evening, everyone. Hi, Joe. Do y'all watch the 5 o'clock talk just now? Extend another month of this, what is that, circuit breaker again. Okay, so we are in for another 1 month of webinars. Okay, good evening. Hi, Benson. Hi, Raymond, Mark. Good to see everyone here. Okay, take it positively. Maybe good for us to rest. Hey, Yulanti, good to see you here, Yulanti. Okay, so sorry, just now I didn't tell you all last minute, right? But last minute because 5 o'clock he's talking, right? So better let him talk. Okay, my talk not so important, right? Okay, so I let him talk first. Okay, and then right now today we want to talk about the oil. Okay, oil prices, right? Okay, by now I think you all know what happened, right? Okay, maybe just Google, okay, oil prices, right? Just to let you have an update. I don't know what's wrong with my Wi-Fi also. It's like circuit breaker also now. Okay, hopefully later we'll have no issue. Okay. Anyway, yesterday oil prices. Okay, yesterday oil prices. The futures contract. Okay, yesterday the futures contract, the May contract, which is actually expiring today. Okay, the futures contract. Maybe we just talk about futures first. Okay. Should we talk about futures first? Okay, now this one also not working. Okay, so futures, right, is how traders will trade. Okay, so they always trade the most current month, okay, of the futures contract. Okay, let's say example, yesterday one that dropped to minus $37. That one is actually the May futures contract. So as a trader, right, because your main objective is to trade, it means you trade that futures contract. You trade the May contract. So by today, right? By today, the futures contract end and you will be settled. Settled means to say the person who buy the contract will have to buy the underlying, have to get delivery. Okay, the person who is selling will actually have to deliver the oil. Okay, that is called futures contract. But traders themselves, right? They are not really into the physical. That means they don't really go and buy and sell oil, and so that at the end of the day they have 1,000 barrels of oil. Okay, their objective is not like that. The objective is mainly to trade. That means they will trade them usually the most current month. And then yesterday what happened is hang on. So yesterday what happened is while they are doing their trading, okay, while they're doing the trading, they have to finish this current month, they have to trade the next month, right? So right now the issue is with oil is people are storing a lot of oil. Okay, they are storing a lot of oil. So at first they store in the on land, okay, where the bunker is. But then later part they say, hey, no more space to store oil. But oil is so cheap, you see. So they don't want to immediately use it. They say, okay, where should we store oil? So they start to store oil in tankers. Okay, I read somewhere every day, right, to rent a tanker. I think it's like 30 over 1,000 just to rent a tanker to store oil. Okay. So because there's no demand, okay, China is not using the oil and things like that. So there's no demand for that oil, okay? So they have to store oil. So what happened is yesterday, they feel that they rather not take delivery. They don't want to receive the oil. They don't want to buy the oil. They don't want to be the one that's, at the end of the day, receive the delivery of these barrels of oil, right? So they sell, okay? They sell, and then they may roll over. They may roll over to the following month, that means a June contract. Okay, so that came a situation where they sell until they have this mechanism where they can sell below zero. So they sell until below zero. So they are not willing to, they're willing to even pay not to receive the oil. But it's a more of a speculating instrument. It is in reality, you don't really get the $37 when you get the delivery. Do you follow what I'm saying? Okay, it's more a speculation instrument. Okay. Okay, Edith asked, right? The first 6 days of recording is in my YouTube channel. Okay, but now my my Wi-Fi also don't know what's wrong with that. Later I'll post up the YouTube channel list. Okay, maybe I'll post it up later, Edith. Okay, then I can show you all the previous few days. Okay, so far I just give you some backstory of what's happening to oil. So okay, situation is like that. So we have also the Saudi and the Russia. They are not happy with each other. They're quarreling, so they try to slash each other's price. And then few days ago, okay, they really have this agreement. Okay, everybody will slash price. Everybody will slash production. Okay, we don't produce so much oil, so they can stabilize the market because this COVID virus thing. Okay, but who knows? Okay, this price continue to go down, and then right now we have this current situation. Okay, so okay, that is the context of oil. Okay, that's the fundamental, the story, the backstory behind this oil. Okay, so question for you all is so how can we trade this? How can we make money from this? Okay, so there are there's a few ways to look at it. Okay, there's a few ways to look at it. One way is to look at it this morning. Okay, even on LinkedIn, people are messaging me, and on Facebook, people are messaging me and say, "Hey, Collin, how to benefit from this thing?" Okay, so I think your time horizon again got to be correct lah. Okay, if your time horizon is correct, then I think it's okay. But if your time horizon is not correct, then may not be right. Okay, so let's say example your time horizon is correct. It means your time horizon is, let's say, 2 years, 2 years. Okay, you want to buy oil literally free. Okay, very cheap. Okay, $12. Okay, I think the lowest production cost is Saudi Arabia. Saudi Arabia can produce it at $10. Anybody else lose money. Okay, the shale gas, they are doing like $70. The cost of production is like $70. On average, I would say the cost of production is at least I would say $40. Okay, about $40 over. So to produce the oil for most producer, right, it is not at $16. Do you follow what I'm saying? It's just like when you build a property, they got the land cost, they have the cost of the building, the cement, and everything. Add together the replacement cost in property, right? Now the current price is trading below the production cost. That means the producers are actually subsidizing you to buy oil. Okay, so if you have long enough time horizon, right, you know that it's a buying opportunity. Yes or no? Because you cannot have the producers keep subsidizing you to buy oil. Yes or no? Okay. Oh yeah, forget. Okay. So we're talking about this. Whatever I share with you all is for education purpose, not advice to buy and sell. You all agree? Please type yes. Okay, and please go and check out the facts. Go and Google, go and find out whatever I share with you all, the facts also. Can we do that? Okay, if you agree, please type yes. Okay, I'll say majority of the people here are SMT graduates. Okay, I recognize most of your names. Okay, for those people who are not SMT graduates, if you want to be part of SMT graduate, I let you know. Hi, Li Ching. Okay, so majority are. Okay, but for those people who are not, this is the link. Okay. Okay. Okay, this is the link if you want to find out more about SMT graduate. Okay, then we come back to here, right? Okay, so we have some backstory. Okay, we have the COVID virus that is reducing the demand. Okay, that means we don't have any manufacturing. Okay, manufacturing needs oil, right? We don't have any manufacturing. We don't have any need of oil. Oil prices is low. Okay, at the same time, we have these two countries are quarreling over the price. They want to kill each other. Okay, so basically that is the main gist of the matter. Okay, as traders, okay, we want to trade the trend. Yes or no? We want to trade the trend. Okay, so how we trade the trend is really to make money. Okay, our objective is to trade the trend. Okay, so back to, let's talk about it in 3 parts. Okay, first part we talk about first the instrument. Okay, we talk about instrument. Okay, sorry, first time I already mentioned it. First time we're talking about the backstory. Okay, what's happening right now? We already finished that. Okay, so first one finished already. Second part, I talk about instrument. Okay, what are the instrument you can use to trade oil? Okay, then the last one we talk about TA. Okay, how to look at chart, how to go in and out. Okay, for oil. Okay, so for backstory, can go and find out more. Okay, what's the backstory of this oil? Okay, so but at the end of the day, these are all stories, right? But most important is how to trade them, how to make money from them. Okay, so second part is how to trade them. Okay, so there are I would say 3 ways. Okay, so main ways for most retail investors, there are 3 ways. One way is through you can buy oil through ETF. Okay, you can buy oil through ETF. ETF is called exchange traded fund. Okay, these are the top ETF in the. These are ETF over there. Where is it? Okay, so these are top ETF. Okay, so this ETF over here, right? This US oil ETF, they are saying that this is the biggest oil ETF, USO. Okay, USO is the one giving the trouble. Okay, because they are the one that is doing all this instrument. Okay, people buy into the ETF. By the way, do you all know what's ETF? If you know, type yes. Okay, if you don't know, type no. Okay. Okay, so ETF, right, is basically what you call passive managed fund. Okay, passive managed fund, like unit trust. Okay, they are passive managed. The manager, what it wants to do is to track the underlying. Okay, the underlying can be oil, the underlying can be an index, but the underlying. Okay, but how they track this index is like USO. All this they use futures. Okay, they will buy and sell future contracts. Okay, to try to mimic the actual price of the oil, okay, the underlying, okay, of the oil. But it's not 100% tracking. That means they doesn't move together. Okay, how oil move and how oil move and how the ETF move may be different. So that's what we call a tracking error. Okay, tracking error for the oil. Okay, so these are all the oil ETF. Okay. That's over here. The biggest one is actually this one. Okay, this is the USO. It's the biggest ETF. Okay, it's the biggest ETF. Okay, ETF. That's what I mentioned already. Right? So Sharif and hey, hi Indra. ETF is basically passive managed. Okay, fund manager doesn't do anything. Doesn't buy and sell anything. The objective is just to follow what the underlying is. Let's say, example, is a US oil. You want to follow what oil does. Let's say it's a SPY is a index for S&P index. They use the things to follow S&P index. Okay, can? Okay, so there is tracking error. Okay, there's tracking error, meaning to say that because of this situation right now, right? Okay, because of this situation now, miners and things like that, ETF has possible to have it may not follow. Okay, so exactly. Okay, so maybe just to show you, right, on this case this. Okay, so okay, let me finish up first, then we go into the charts. Okay, so first way is ETF. Second way is you can go through what we call CFDs. Okay, you can go to most of your CFD provider. You can ask them, okay, do you have oil ETF? Okay, most of the CFD provider, CMC or whatever, they will have their oil ETF. Okay. So it's the second way, okay, is through CFDs, okay, through CFDs, and then the third way is through futures, okay, through futures. Futures is a fixed contract, okay. There's a particular size of this contract, and then they can trade through an exchange, futures exchange, okay, and then buy and sell like a stock, okay, like a stock, but it's in the exchange, okay. Whereas CFD, right, you're buying and selling with the broker. Okay, you're trading and selling with the broker. Okay, so summarize again. Okay, so we have ETF. Okay, ETF is like a fund. Okay, it's listed also in an exchange. It's traded like a stock. Okay, and it's like a fund. So you can buy and sell. There's a fund manager inside that actually tries to mimic that that unit price to make it similar to the oil prices. Okay, first way is like that. Second way is we have CFD. Okay, CFD is provided by the CFD provider. Okay, it is not listed in any exchange. Okay, CFD provider. Most of the time for CFD, you can trade in smaller size, in smaller amount. Okay, unlike when you trade in futures, right? It's always one contract. Okay, there's a fixed lot size like that. Okay, it's a one contract. Whereas in CFD, you can break it down into smaller contract. That's the advantage. The disadvantage is generally the cost is more expensive. Okay, the transaction cost is more expensive. CFD versus futures. Futures is like the cheapest cost. Okay, futures, the advantage is it's an exchange traded. So when exchange traded in futures, everybody look at the same thing. Everybody look at the same price. Everybody know the exact future price right now. Okay, so that is for futures. Okay, so but the disadvantage is there's a fixed contract. Okay, there's a fixed contract for this CFD. Just like I mentioned this one, right? You can go and Google lah. Okay, these are all the different oil related CFD. Just Google. Okay, just Google US oil ETF can ready. Okay, a lot will come out. Okay, and they are traded in like a stock. Okay, they are traded in the different exchange. You can ask your broker, I want to buy USO. Okay, the USO is traded in NYC, is it? Okay, so it's traded there. Okay, so you go to that country or that market, and then you can trade there. Okay, any questions so far on the instrument? Okay, so Victor mentioned just sound correct. So because just like natural gas, okay, natural gas, we also have one natural gas ETF, which try to mimic the price of natural gas. However, wow, the tracking very far. Okay, it's like one going this way and the other going there. By right, they supposed to track together. Okay, but because they use futures to track the underlying, okay, so usually there was some difference. Okay. Okay, so just take note of that. Okay. No question, type no. Now you go to the third part. Okay. Any question? No question, type no. All right, Pisat. Okay, you are. Pisat, you can open up account. Can I contact you later? Okay. PM me later. I can tell you how to trade. Okay. So any question on the instrument? Okay, so 2, 3, okay. ETF long term. Okay, ETF long term. ETF no financing charges. Okay, ETF listed in an exchange. You buy and sell like a stock, like a fund. You leave it in that. It is like ETF. Okay. Then CFD always leverage. So always have financing costs. Financing costs to be the broker lah, because it's always leverage. Okay, that's why CFD, okay, can be smaller size, can bring to smaller size, and okay, so that's ETF, CFD. Then the last one is futures. Okay, I would say like that. If you are a full-time trader or you're a very active trader, then futures is the case. Okay, future or CFD is the case. If you are really full-time, most people trade futures because the commission is low. And it's centrally traded. That means the price is always the same, because CFD sometimes the price can be different, right? But for if you're a professional, usually you trade futures. Okay. Then for long-term investor, usually they do ETF. Okay, because ETF no leverage. Okay, and ETF is buy and sell like a stock, no leverage. Okay, and no financing. So, but you're in between hybrid and CFD lah. Okay. Any question? Okay, so Noah's question is CFD account opening, is it same as stock? You already can trade CFD already right now. ETF already. It's just like a stock. Okay, just make sure that you don't have you you fill the WA band. Okay, just make sure you fill the WA band. Okay, then the next thing is, oh yeah, you can use few options to say, but options is another method again. Option got strike price or expiry volatility, so it's another method. Okay, so option I would say is consider professional already lah. Okay, because you are trading options. Okay. Okay, so right now, frankly, there are talks of the USO to avoid the USO. Okay. Okay. So I will do that. Okay, I will avoid the USO. Okay. Which one is better? I don't know. Okay, I don't know. Go and do research. Okay, I would say the most all will have tracking error. Okay, all will have tracking error. Okay, all will have tracking error. Okay, so just take note of that. Think of swim, you can trade ETF, you can trade, can you trade futures? I don't know. Okay, but you can trade the ETFs. Okay. If you don't know which one to trade, then the best is CFD. Okay, best is CFD. Okay, if you are trading. Because CFD can buy and sell easily, can buy and sell in small amount. The only thing is the financing cost. Okay, why avoid USO right now? That is go and Google also, because USO right now is the one that is causing this drop. That's causing this minus 37%. So you see the guy in the guy that is managing this USO, right? They buy and roll over the contracts. Okay, they buy and roll over the contracts. That means they have to sell this month contract, roll over to the next contract. You follow what I'm saying? So they are the one causing this huge drop. And I read somewhere they still have things to sell. They haven't sell finished. Okay, still got 100 and we now sell some. They still have about 108,000 worth of contract haven't sell, not finished. Okay, so that is the current situation right now. And tonight expired. Tonight is going to expire. Okay, so the next question is holding time frame is based on your strategy. Okay, based on your strategy. Okay. Okay, so okay, now let's talk about the trading part. Okay, the trading part of it. Okay, are you okay? Because quite a lot of questions. Okay, some of the things you can Google lah. Okay, no need to ask me. Okay, some of the things you can Google. Okay, so so next thing is I think general what I want to share your general USO avoid for now. Can USO at least avoid for now. We don't know what is the story, but at least avoid for now. Okay. Okay, so now let's talk about the strategy, how to trade the CFD. I'll talk about CFD. Okay, CFD is the easiest. CFD again don't have rollover. Okay, don't have rollover. They have to buy contracts, sell contracts, things like that. Okay, so that is the thing. It's continuous. Okay, it's continuous. Okay, so that is the thing. Okay, so now, let's talk about the strategy. Okay, some of the graduate already know this strategy. Okay, what is this strategy for US oil? Who can tell me? For swing trade, what is the strategy? For US oil, what do you think is the strategy? It's so simple, right? Nobody know. For swing trade, you want to trade oil, CFD. What is the strategy for that? Okay, what's the strategy for this? Yeah, what is the strategy you will use for this? No, not MA crossover. Our standard trading method, guys. I know, but our standard selling method, the 20/40 MA and the CCI. Okay, for those that are not familiar with this method, I've been teaching it for like many years. Okay, you can go to this website. Okay, you can download the e-course. It's the exact strategy, okay, the 3-part video, and then you can watch this there. Okay, I won't go into the strategy today. Okay, but if you want to find out how this strategy work, go to here. Most of the people should know this strategy. Yes or no? If you know how MA CCI strategy work, can you give me a yes? Okay. If you know how MA CCI strategy work, can you give me a yes? I would expect a lot of yes, because like 80% are graduates. Okay, so let's take a look. Okay, let's take a look over here. Okay, doesn't mean it can only apply to stocks, apply to everything. Okay, so let's take a look over here. Can you all see the MA sloping down here? So MA sloping down means what? Yes, of course. Okay, good. Okay, so so the trend is down. Yes or no? Okay, the trend is down, and then after that you have the CCI high. Okay, where the CCI reach the high point? CCI reached the high point here. Yes or no? On this candle, the CCI, which is a CCI 5. Okay, this is like an oscillator. Then it will. Then you want to look for what? MA CCI. Then from there you look for a short. Okay, you look for a short here. Okay, look for a short here. And then after that, you put a stop loss on top. Same thing. Same thing. Okay. You see whether you trade oil, whether you trade stock, whether you trade index. I don't change the parameters. I don't change the strategy. Yes or no? Okay. The e-course, you all can look at the e-course here. Okay. Same thing. Okay. If you want to go longer time frame, then what do? You can go to weekly. Same thing. Okay. Go to weekly. Same thing. Got it? Okay, it's the same thing. Okay, so let me ask you a question. You at oil right now with WTI crude oil CFD, right? Is it uptrend or downtrend? Uptrend or downtrend? Downtrend, yes or no? Okay, so downtrend, downtrend is the downtrend. Downtrend is correct trend. Okay, still downtrend. So don't go and okay, for this, right, to settle down, guys, in my view, right, for this to settle down will not be so fast. Okay, that means right now is unlikely in the next 1 month suddenly it will go up like that. Unlikely. Okay, this will take some time to die down. Okay, the rollover, the COVID virus, the argument, all these things, right, will take time to settle. Okay, it's not like one day settle everything. Okay, so what you do is you can still trade it. Okay, you can still trade it. Okay, so right now, okay, let me show you all some context, right? Maybe on the weekly chart, then it's clearer. Okay, right now there is a very strong reversal candle on the weekly chart. Can you all see that? Okay, there's a very strong candle on the weekly chart. Yes or no? Okay, so let's say example you want to trade for the next 1 month, next 2 months. Okay, what you want to look for is maybe this thing to rebound a bit. Okay, and then you can plot the what? You can plot the 10 MA. You can plot the 10 MA. Where's my 10 MA? Where's my 10 MA? Not enough steep. Okay, I plot my 10 MA, and my 10 MA is here. And then after that, wait for a rebound. Wait for this CCI to go higher. Okay, wait for this CCI to go higher. Then you can wait for a sell down again. Do you all follow what I'm saying? Got it? Because of this candle. Okay, this candle went to 0. Can you see that? Went to 0, pump, rebound. Okay, if you're longer term, you're doing weekly swing. Okay, weekly swing, then maybe don't trade this part already. Weekly swing, what you want to do is You want to wait for rebound, okay? Wait for this line to catch up. Okay, wait for this line to catch up, and then after that, catch up already, then you can swing it down back to $14 or something like that. Okay, for those that don't understand this strategy, I think it's good that you just go to that e-course to find as how we treat this method, because today's topic is not on trading this method. Today is more of talking about oil itself. Okay, that is if you are trading the next 1 month or 1 to 2 months. Okay, if you are trading 1 to 2 months, you want to wait for rally to sell again. Okay, wait for rally to sell again. Okay, if you are long term, that means you call in and say, yeah, production cost is, let's say $40 or $30. Let's say $30. Average, everyone is producing at $30. So right now, the producers, right, are subsidizing you to buy oil, right? Eventually, either number one, a lot of oil company will collapse. Yes or no? Okay, that's another topic again. Okay, that's another topic again. Later we're going to talk about it. Okay, so some of the producer may cannot take it anymore, bankrupt. Okay, so when they bankrupt, lesser supply. Yes or no? But eventually it will go to the cost of production. Yes or no? Does it make sense? Hello? Does it make sense? So if your view is like that, it cannot be producer forever selling at a loss, right? Even you quarrel, right? Eventually you have to be logical, right, to make money, right? So if your view is like that and you have a long-term horizon, you feel that COVID virus eventually will over, then you can be a buyer. But I want to share with you all, if you're a buyer, you must be able to close eye and don't see, because right now there's going to be volatility. Okay, there'll be up and down, up and down. Got it? Okay, so if you're a buyer, then most likely you want to buy the one of the ETF, no choice. Okay, going to find a better one. Maybe avoid USO, look for others. Okay, what you can do is you can also find out what is the tracking error. Go Google, find out what's the tracking error for each of the ETF. Okay, so I have covered some strategy also. That means I've covered if you are swing trading, the next 1 to 2 months is still stand on strength, but the trend is still down. If you are long-term investor, you want to buy, most likely you want to buy ETF, go and find out which ETF. Okay, I don't want to tell you which one. You're just going to find out which is the better ETF. Okay, and so there's some question: what is the impact of oil on S&P 500? Okay, so think about it. Okay, so we change a bit of topic. Oh yeah, before I talk about this, let's talk about the danger right now. You see, if I'm a oil company, okay, and during good times, oil prices high that time, right? Let's take a look. Maybe oil prices at 2013 high. You see, to make a rig, it's like immediately you get, right? Okay, I think Raymond will know, right? It's not immediately you get the oil pumping. Yes or no? It's not immediate one. Okay, so you need to. There's a huge investment that's needed to drill for oil. Yes or no? Hello, do you follow what I'm saying? Okay, so they will need to look at the price, and then they need to predict going forward what is the price. And then when they want to start drilling or they start production, right? They will do what? They will go and either borrow money, okay? And during then, in 109 to about close to maybe 1415, interest rate is practically at 0. Free money. So this company, what they do, they say, hey, now oil prices is high, money is cheap, let's borrow money. Okay, let's go and borrow money. 2 ways to borrow money. One way, you borrow money from a bank. Yes or no? You go to the bank, hey, say I want to borrow money at lower interest rate because I want to build my rigs or whatever. Okay, I want to build my drilling and whatever. So then they will look at the oil prices during that part. Okay, hey, oil price is $100. Okay, not bad. Okay, you can make a profit. Okay, because your production is, let's say you calculate, okay, $70 or $40. Okay, they can make a profit. Okay, lend you the money. Okay, but when oil price crash, what happened is the equipment is still there, yes or no? But the loan is also still there, yes or no? Okay, the equipment is still there, you can produce oil, yes or no? But if the oil go below the cost of production, then no point producing that, yes or no? Okay, so you have something that is let's say like right now, right now, right? Fast forward 5 years, like right now you have a rig, okay? You produce oil, you are not making money because your cost of production is higher, okay? But at the same time, your loan, right? Your loan right now is still there, yes or no? Your loan is still there, right? And then you cannot make the money. So what do? You borrow money from the bank or you issue bond, right? So you cannot make money from your producing your goods, right? And you cannot pay the bank. Then what do? Do you have what I'm saying? Okay, so it depends. Okay, so it depends. Leaching, right? So there are different production. Okay, in shale gas, it's like $70, $80. Okay, $70. Okay, so what happened is like that, right? In that case, then what will happen is they declare bankrupt because cannot pay, right? Default the loan. Yes or no? Okay, default the loan. Okay, so that is the thing. If they default the loan, then who will they affect? The banks. Or they can issue rights if you want to buy. Okay, if there's nobody buy, they do bankrupt or they default the loan. Okay, I think the main issue here is not so much of the bank. Banks is one thing. Banks is maybe the government will bail out the bank, but the default of the loan is a big thing. Why? Because during this period, right, where interest rate was low, they chase for you, right? They chase for you. Hey, which company give very high bond? Okay, so they will buy the bonds. Do you follow what I'm saying? The bank will buy, the individual will buy the bonds. Do you follow what I'm saying? So bond is like that. If default, means don't have, You get what I mean? If default means too bad, Okay. So that is the challenge. Okay, if bond is the default is big thing lah. Yes or no? Okay. Banks, hopefully they are diversified enough. They lend this person, they lend other companies can diversify the risk. But bond, if you invest in a bond, the bond hui or the bond default, then you liao already. Then you really have to liquidate the company and see how much you pick back. Really liao, right? Okay, so that is a issue if you are in this situation. Okay, so that was just now we're talking about risk. Okay, risk. And in this current situation, is there a risk like that? Yes, definitely. I think there is recent article, hundreds of company already preparing already, or preparing to bankrupt already. Okay, Singapore also got one, right? Very famous now. Okay, but talking about also the spillover effect. You see, when oil services or oil company they default or they bankrupt, right? There are a lot of spillover effect. Do you follow what I'm saying? There are the upstream, the downstream, all got spillover effect. Okay, the banks also got spillover effect. Okay, so all this got spillover effect. Understand? And frankly, now it's still not really out there yet. Yeah, you got the Leong Hin thing, but it's not really out there yet. Why? Because the government, everyone is trying to unite together and tell each other, we're going to pump in a lot of money to support you, and we're going to pump in money to make sure that you don't bankrupt. Yes or no? So there's still, so that you can, and then government also is keep jobs. Yes or no? They don't want people to go bankrupt, right? They want to keep jobs. Do you follow what I'm saying? I will print a lot of money to support you. Got it? Okay. So that's the thing about oil. Okay, so now come back to oil price on S&P index. In fact, I wanted to do one topic about inter-market analysis. Okay, like how oil price, how US dollar will affect the commodity price, how commodity price affect the oil price, how oil price will affect even the bonds. Okay, so let's talk about this right now. Okay, so oil price and US dollar is usually inverse. Okay, it's usually inverse correlation. Okay, so in general, because oil is priced in US dollar, yes or no? Okay, oil is priced in US dollar, so they usually have an inverse relation. Okay, until one day, I think they won't allow oil to price in any other thing. Even though right now there are oil price in yuan or something like that. But in general, if people try to price oil in any other things, right? What they do? They go and bomb them. Okay, correct. Okay, so they were why? Because if oil is priced in US dollar, then you want to buy oil, you must buy US dollar. Yes or no? Does it make sense? Okay, if oil is priced in US dollar and you want to buy oil, you must buy US dollar, correct? But let's say, example, you bypass US dollar and you bypass US dollar and say, I buy in yuan, right? Or buy in cryptocurrency, right? Then you don't have demand for oil. Yes or no? They won't allow that. Yes or no? Does it make sense? Okay, so there are talk last time Kuwait or whatever, right? Iran or things like that. Why they bomb is because of oil issue. But that's another topic, okay? That's another topic for another day. Okay. So US dollar and oil has an inverse relationship. Okay. And oil have to do with what? Oil has to do with the economy. Okay. Think about it. When the economy is doing well, when people are producing, when the manufacturing is good, they use oil. Do you follow what I'm saying? Okay, they use oil. Okay, when they like right now, nobody is using any oil. Economic activities at the lowest. No oil needed. Do you follow what I'm saying? Okay, no oil needed. So oil will not be needed. Okay, so that is the relationship between oil and US dollar. Okay, so about the market. Okay, so think about it. Let's say, example, right now you are a company. You are a company that produce what? You produce equipment okay, that requires oil. So you have a few parts. Okay, one, you can issue bond. Okay, you can issue bond. You can ask people to lend you money to start your own company. You can do IPO. Okay, you can sell the company, the shares of your company. Okay, so you become the shareholder of your company. Okay, then you produce the goods. Then you require oil. Okay, then after that, so this is the few things. Okay, bonds, equities, equity, commodities. Okay, US dollar or fixed income. Okay, these are the few things. Okay, so they rotate. Okay, they rotate in such a manner that at the worst, okay, let me just Google this and show you all. Okay, so actually I don't have this intention to talk about this. And another day maybe I will talk about it more in detail. Okay, because so there's this guy called John Murphy that wrote this book called Intermarket Analysis, and then he talked about the correlation. Okay, John Murphy wrote this book, right, called Intermarket Analysis. And then it talks about the relation of oil and bonds, oil and commodities, things like that. Okay, so positive relationship, bonds and stock. Okay, so either I owe you to the company or you're the shareholder of the company, they have a positive relationship. Okay, bonds always change in ahead of stocks. Okay, bond investors are generally like smarter. Okay, bond investors are like they call like smarter. They are the people who lend the company the money. Okay, they're smarter. So they usually, when something go wrong, bond will affect first. Okay, then later stock. Okay, then and then green bond is usually typical size is like 250,000 size. Okay, now we got smaller one retail, but generally one ticket one time you want to buy one bond is 250,000. Okay. So, but stock, you can buy $25 or $250, you can buy stock already. Okay. So then after that, inverse relationship between bond and commodities. Okay. That means when commodities go up, okay, bonds go down, inverse the other way around also true. Okay. And then last one is US dollar versus commodities. Okay. So most of the commodities, all the commodities are actually priced in US dollar. So they have this inverse relationship. So when one go up, then the other one come down. Okay. So this is basically the relationship in the market. Okay, so I have checked a lot. Okay, longer than I expect. Okay, what I want to suggest to you all is like that, guys. Okay, when you want to invest, do invest with open open mind. Okay, invest smartly. Don't go and even whatever I say, right, go and test it out. Okay, so but are there strategy that you can use to trade oil or trade any other instrument? Okay, you can use Trader GPS. I think, have you all seen Trader GPS using US oil? Who have done it before? Who has used Trader GPS trading US oil? Nobody, yeah. Okay, but you can see from here, these were all short signal along the way. Yes or no? From $12, sell until $3. Okay, sell until $3. Right now, okay, not the time to short. Okay, why? Because you notice that here, here is a strong trend. Yes or no? Oh, why? Because you have the arrow, you have the teeth. Here is a strong trend. You have the arrow, you have the teeth. Things like that. Okay, but right now over here at $3, what happened? Got arrow but no teeth. Yes or no? Okay, so it is, even though whatever you read on the news, I look at this, you know that actually if I shorted from here, right, I buy and then from here I short, I already make 200% already. Do you all follow what I'm saying? If I right now buy back, I will have made 200% already. Okay, for those people who want to find out, majority of the people know about this, because majority of people are part of the SMT community. But for those that do not know and you want to find out what is this system about, you can go to this website. We have a class on this. Okay, we have a class to explain how this works. Okay, but majority of people, you all know what I'm talking about, right? Okay, US oil, you look at the signal. Okay, so just now got one stock, right? You want to ask cobalt, right? This is the oil we talk about this morning. Is that okay? So cobalt, right, is actually not oil. Okay, in fact, is natural gas. Okay, go and study a bit. Okay, of the business. Okay, so this is one of the stocks we talk about. Okay, cobalt oil. Okay, any question? Any question? Okay, no question. And okay, do me this favor. For the 200 over people here, do me this favor. If you can do me this favor. Why? Because I want this to be benefit as much people as possible. No, for me it doesn't have extra effort. So do me this favor. Share this post. Okay, share this post. Then can you hashtag this after you share this post? There will be a recording. Okay, there will be recording done, and then after the recording is done, and then you can share this post. Okay, and then hashtag 21 days trading challenge. Can you do that for me? Okay. Okay, share this post and then hashtag 21 day challenge. At least I know who helped me to share the post. Okay. If not, then tomorrow. Okay, tomorrow actually we already prepared tomorrow's class already. Tomorrow we're going to talk about something very interesting. I want to share with you all mathematically, right? An instrument that beat fixed income across long time. Do you all follow what I'm saying? Okay, I want to share with you an instrument that can beat fixed income if you have enough time. Almost like, very simply, it's logically, it will beat fixed income. Okay, tomorrow I'll share with you this thing. Okay, 5 o'clock, good, I'm going to share with you this thing. So share this thing, okay, 21 days trading challenge, and then share the post or like and share the post. Okay, if not, then thank you very much. Thanks everyone for being here. Okay, see you tomorrow at 5 p.m. Thank you. Bye.